Welcome back everyone. Let's get right into it. The company we're talking about today is Palantir, ticker symbol PLTR. Now this is quite an on-topic company. Obviously we're going to be talking about the contracts, the new contract as of this recording they've just got, and where I can see this going. Now currently they're sat in the middle price range, so this could really go either way with Palantir. But for those who don't know, Palantir, to summarise, they build the world's leading software for data-driven decisions and operations. So they basically take all the data from companies and make sense of it all. Some interesting facts: Palantir Technologies reportedly helped locate Osama bin Laden. And if you look at the team, they've got Peter Thiel, who's the co-founder, and also the co-founder of PayPal, who obviously I'd like to think people have heard of. In terms of contracts, they've got a 3-year contract with the FDA, and that's worth $44.4 million. The continuation of a multi-year army contract worth up to $458 million. And they also had a contract with the NHS, which was a 2-year contract to track COVID infections, to boost healthcare resources in emerging hotspots and divert patients to the most effective facility. So where does Palantir sit in the market currently? Well, shareholders have done very well over the past year, with the share price soaring by 136%. Even though the company is currently unprofitable, investors are putting a lot of faith into their growth and future value of Palantir. And the new contract I was just talking about, the company just won a $823 million contract from the US Army, which is a huge deal. And we wanted to examine the cash capacity of the company to withstand expenses until reaching profitability. So how long is Palantir's technology cash runaway? So a company's cash runaway is the amount of time it would take to burn through its cash reserves at its current cash burn rate. When Palantir Technologies last reported its balance sheet in June 2021, it had 0 debt and cash worth up to $2.3 billion. And this is obviously something really good to see. In the last year, its cash burn was $62 million. With its current cash balance, and if we hold spending costs, Palantir have 3 years of operations before it would run out of cash. Obviously, the company will grow and decrease expenses with time, so there really isn't much risk in liquidation. So, is Palantir's technology revenue growing? Personally, I think it's fairly positive to see that revenue grew 47% in the last 12 months. While Palantir is showing solid revenue growth, it's still worth considering how easily it could raise more cash, and that obviously will fuel faster growth for the company. So, is there enough gas behind this stock? Well, in a situation where investors are excited and hopeful for a company, it is sometimes better to be on the overspending side rather than being on the tight budget side. With a 3-year cash runaway of $45 billion market cap, Palantir, for me, might want to consider starting some more frontier projects in order to reinforce their revenue growth. So there is no growth without reinvestment. We all know this as investors. And at this stage, the company may need to do a lot more than estimated on a 26.4% annual growth rate, according to analysis, that is. The importance of obviously a reinvestment cannot obviously be understated for companies in high growth phase of their cycle. And this is obviously quite common. Obviously, in order for Palantir to justify a higher market cap, the company needs to outline current investments and plans for future expansions that have the capacity to bring significant cash flow. So in conclusion, where does this put Palantir? Well, Palantir, like we've said, has enough cash capacity and the ability to raise more capital for at least 3 years of operation. So this is definitely a swing to long-term hold. During that time, the company has the opportunity to develop and become self-sustainable, which is obviously the key thing we need as investors, and probably for me personally, what I would like. One can argue that while the company is experiencing growth, Palantir is finding it hard to justify the current market capitalization, and they may need to reinvest more into long-term growth. If the company fails to entice shareholders with profitable projects, then 3 years can be a long time to wait for a justified $45 billion market cap. So they're sitting at around about $24 as of this recording. They've actually $23.83. So do I think that is a good investment? Well, this is not financial advice. If you want to see my buy and sell alerts, follow our Patreon account. The link will be below, from weekly watch lists all the way to exactly what I'm trading. In terms of if this is a buy opportunity, I would say currently they're really at that vulnerable stage of where you get people saying this is a $10 to $11 stock, others are saying this is a 50 plus stock. I can see this in the long term being a $40 plus stock, but as long term, what I mean by long term is that this could be a 6 month to a year hold. So if you're looking to day trade this, for me, I'd stay away. I would be looking at a 6 to 12 month hold, and obviously depending on their growth and what they do, this obviously could be a lot more. So if you're going to hold this for 6 months to 3 years, I think this is a great investment. Do I think you could get a better price? Well, if they break $20, then it depends where the next floor is. So currently, if you're looking for a long-term investment, yes, I think this is a great opportunity. If you're looking to get a better price, well, they are at a volatility stage with the market, so it might be worth waiting. But if you want to see when I personally buy this or have bought this, follow the Patreon account for more. Anyway, that wraps it up for Palantir. Thanks for watching.